Welcome back everybody. I hope everyone's had a great trading week. It is Tuesday, that means Technical Tuesday, and this is volume 34.
Now it seems like it's been a long time since we've actually interacted with you guys, so we do actually have a key topic which we're going to discuss. Now this topic actually, well, the idea for this topic actually derived from current market conditions, some stuff that me and Nat were actually discussing earlier on, and also we've had so many students in this month alone who've come to us with experience, and their trading is all over the place and they've got way too many trades on. They're trying to trade up, down. However, we told them to stay back because it's a range bound market, and that is the topic for today. Range bound markets.
That's right, and in this short video we're going to be discussing in a very simplistic way possibly why it's range bound, some advantages, some disadvantages, hop straight on a chart, give you guys some examples, straightforward. It's going to be effective. We know we get this question many times. I've entered a trade, it's been 1 or 2 days, it's been longer than that, I'm still at break even, I'm not in profit, I'm not in loss, what am I doing wrong? So this video is for everyone and anyone that is involved in the market. Right, definition. What is a definition of a range bound market? So definition of range bound can also basically be called a sideways market. Range bound is basically noted by the number of moves between two similar price points. That's right, you've got your support and resistance, simple as that.
However, that support and resistance, if you do not get it accurately correct, everything can be all over the place. Now personally, this is something I used to struggle with a lot, mainly when I wasn't looking at the bigger picture. Now, I know many traders out there can actually relate to this. You know, you could have a nice trending market on whatever time frame, and you could be selling, and sometime it could just get boom, it bounces off a key area of support, and now you know you're stuck in loss, etc. This is something basically that overall recognition of when a market goes from trending into range bound is something that we're going to be covering. I'm going to give you some tips later on how to recognize this.
That's right, range bound sometimes can be from, you know, limited basically volume in the market. When the volume slows down, the market quiets down, you get trapped in a range. And a lot of people can, you know, usually interpret this like, you know, basically there's a zigzag market. You know, it's not trending, what do I do? And many people actually don't realize this. A lot of people that come into the market, a lot of people that have come onto the course, a lot of people that we speak to think that the market firstly often trends and then can sometimes be sideways. Well, we're here to tell you some harsh realities. The market can be 70 to 80% trending. That's right. That's how important it is, and that's how important this video is to get you guys across to understand how to accept it and trade with it.
Now, first of all, a ranging market can come across on many various time frames, which we'll get into shortly. However, the main aspect of spotting a range bound market is actually accurately placing on your key levels of supply and demand.
That's right, and you know, a lot of people, you know, don't really know what kind of range or how many pips a market could be in to be range bound. We're here to tell you, sometimes you might get a 20 pip range, sometimes you might get a 50 pip range, or even a 150 pip range. It totally depends what kind of trader you are, what style you are, and basically your outlook on the market.
Indeed. So first of all, fortunately, the FX market actually allows us traders to take advantage of these mixed market conditions, whereas some other markets out there will only allow you to go in one direction. There's some equity markets where you can only buy certain trends and certain markets and so on. So this allows us, well, first of all, you have to have the mindset to be dynamic and very flexible within your trading strategy. Many of you guys actually know, and on a lot of our videos, we always like to catch a trend, okay, get the overall bias and direction, and trade along with the momentum. However, we also have to be prepared for when the market is actually range bound, okay? So I'm going to show you that shortly and how to take advantage of that.
That's right. A lot of times, you know, even in my personal experience, I remember I used to be in a bad habit where I thought, okay, I'm starting with quite a small account, so the only thing I need to worry about is the 5 minute or the 15 minute. I remember there was some bloodshed when we used to stick to the 1 minute time frame. That's why we've been there. We don't mind talking about it. But yeah, a lot of traders actually get confused on what time frame to actually plot support and resistance on.
Yeah, indeed. So first of all, what exactly is a market range? Now, let's take Aussie dollar as an example, because it's one of my favorite currency pairs and you guys know that from the prior videos. Now, example on the Aussie, so let's take the daily time frame and even the weekly time frame, maybe even a monthly. Let's just focus on daily and weekly for now. Now, since May, June, July last year, we broke out of a consolidation range. Okay, we had 20 or so weeks of, you know, doji spinning tops, candlestick recognition. market started to trend to the downside, and what actually happened there, we had some nice lower lows, lower highs, etc., just looking at simple price action, and now we've come down to a weekly / monthly key level of support. And what we can see there at that key level of support, there are a lot of dojis and spinning tops once again, which often represents the market is in exhaustion phase. A lot of sellers are now maybe pulling profits out of the market, and also many buyers might be stepping in the market. It's been sideways for 1 or 2 months, and now we're still waiting for it to make its decision.
That's right. And when Sean says a lot of buyers are getting out their trades now, these are not usually retail traders. These are the bigger institution and the bigger banks, just to make that clear as well.
Yeah, indeed. It's normally known as the smart money overall. So that is why our trading style suited to many people with different size accounts and so on. We always look at the bigger pictures first and see what we can do on a refined, smaller time frame. Now, just to mention as well, guys, on different time frames and so on, a market can generally be range bound maybe just before some key major news, okay, and also, let's say, for instance, in the eyes of,
sometimes you get like bank holidays,
bank holidays, etc., and mainly Tuesday to Thursday are the main volume points in the market.
And we know some of you will even wake up on Christmas Day and try and trade. All that usually sideways, absolutely dead.
Yeah. So in the eyes of a swing trader, okay, a standard swing trader, on a bigger time frame, daily / weekly, the market may be bouncing from point A to point B. It might be a 200 pip range, as Nat mentioned before. However, that same range in the eyes of, let's say, an intraday trader looking at maybe an hourly time frame, 4-hour time frame, even as low as 15-minute, we might see some huge up, down. It may look like the market is actually trending. So guys, it's all about perspective. It's all about adapting to different trading styles and perspectives, and again, keep your eye on the bigger picture. That's
right. Now, just to give you maybe some disadvantages of range bound markets. Now, the disadvantage for traders will usually come if the traders are longer term traders, the traders that like to trade off maybe the daily or the monthly time frame, or for example the weekly. These traders are the type to do their analysis and just simply walk away. Like sometimes when me and Sean are quite busy with our schedule, we'll definitely be looking for a trade that maybe we could potentially hold for a month or so.
Yeah, indeed. So main trades that we look for, okay, we'll break down maybe 5 to 7 pairs and pick out the best one, and we may even say to ourselves, this is great, let's go short or go long. It may take 2 or 3 weeks to get to X point target level. Place the trade, one day we're in profit, next day we look at it, might be back to break even, back in loss, and it's still consolidating in between 2 periods. And we just say to ourselves, we just got to sit on our hands for a bit and let the market play out and do its thing.
Let the market breathe. That's a good term that we like to use as well, which we can pass on to all of you. If your trade's going sideways and you sometimes need to have the extra bit of patience, just say to yourself, you know what, I'm letting the market breathe. That usually helps. When it comes to targets that you can't really achieve if you're a long-term trader in a range bound market, is usually anywhere. Well, there's not exact figure, but I like to say roughly about 200 pips. You can't be expecting these big 200 pip movements if you're in a range bound market. And traders that usually like to trade long-term movements are the ones with bigger accounts, because they can afford and be patient to actually wait for breakouts.
Yeah, so what we want to do is want to step back when there is a range-bound market. Again, you might have to sit on your hands for this one, and we will follow the price action and overall momentum to see, this may have another 500, 600 pips to the downside, for instance, and we'll just have to wait till the price actually gives us that momentum and that breakout. However, a lot of the time we could have it drawn on technically, and again, the fundamentals could just give us that kick in alignment and give us that boost ready to jump on.
That's right. So if you are more of a long-term trader, or you just like to swing trade, or whatever your style is, sometimes you just got to be a little bit more dynamic, and you've got to expect to take advantage of more frequent small trades and small moves within the market. Now, I think that was enough for disadvantages, because I know there's more advantages of trading a range bound market than disadvantages. So I'll pass it up to Sean and go from the charts, because that's the best way to do it. I'm going to go through some advantages of trading a range bound market.
Yeah, so a range bound market could be actually very lucrative to traders. So let's get started. Now guys, let's get deep into it and deep on the charts. So first of all, as I said, a range-bound market can be very lucrative to those who actually understand how to point out a range-bound market and so forth. First of all, Australian dollar, US dollar, as mentioned prior. Now, here is a nice example. It's a 4-hour chart. The overall trend at this period of time in February, coming into the start of 2015, was in fact bearish. And the smart thing to do is obviously ride the trend. Now, as you can see here, the market gave us a great opportunity to go short, even just after this bearish engulfing formation, even after, let's say, even the inside bar formation here, or even the trend line break. Our MAs have crossed over in alignment with the bigger picture. Momentum is down. Sell, sell, sell. So as you can see here, brilliant, nice pips, nice profit. And oh, what happened here? We actually hit a barrier. Now this is a long-term barrier. Okay, sometimes it can seem all good. You're riding the trend, you're telling your mum and dad you don't have to, go to that 9 to 5 anymore, the Aston Martin that you have lined up, until, well, market hits these weekly key levels, these monthly key levels, and now you're stuck. Before I move the chart to the right, I'd just like to explain the first thing in the foundations you must do as a trader, and I'll rip this down on the webinar I did the other day, is plot on your major key levels from top to bottom. Now, by doing so and having foundations and steps to your trading will assist you in all market conditions, okay? So 0.7550, 0.7600, this whole range, just below this price action here, is a monthly and a weekly major key level. Now, if you were short here, okay, as you can see, price action started to go sideways. We dipped lower a little bit here, came up, down. This is just a headache market for some. Now, as you can see, market came back up. You would have been break even / in loss. And if I just zoom out a little, the current market is right here. So yeah, as mentioned, you may have come all the way back up near to break even. However, on the grand scheme of things, this here is a range bound market. Now I'm going to zoom over to the daily in a second. All right, so the first thing we're going to do, I'll show you in a moment how to plot the support and resistance. However, looking on the daily time frame, okay, daily time frame, as you can see, we had a nice run here overall, and then since February all the way up until date, this has been a long period of consolidation. As many of you guys also know, we actually did have a nice long trade on Aussie, very ambitious trade to say the least. However, we did manage to get over 200 pips, even though the overall trend was down. Our range bound key levels actually stretched just a little bit beyond as to where it came up to, just here, just near to 0.8200. Currently, market fell again, retested the lows at 0.7600. I know many people actually are waiting those ones again, as Nat was mentioning earlier on, with the the smart money guys, the institutions, etc. They're awaiting a break of these key levels now, and so are we, to be honest. However, we know we can maybe take advantage a little bit beforehand with early warning signs and early clues as to which way this market's actually going to break out. So for you guys who are new to these videos, the MAs that we have on our chart mainly assist us and make our job easier as a trader to actually define what trend we're actually in, and many of our students actually know how to utilize these MAs and so forth. Okay, so that's the daily. As you can see, we were trending for a period of time now. As you can see just over here, if I just get my rectangle tool, this was around, say, I think it was 20 to 24 weeks of consolidation. Broke out, as you can see, consolidation, broke out, a little bit of consolidation, and so on. Overall, what you want to be looking for as a trader, and I'm always talking about this, the simplicity, bring it back to basics, is that the lower lows, lower highs, lower lows, lower highs, etc. This point here is in fact a lower high in comparison to this one here. So it still tells us that we are in a downtrend. Sometimes in a trending market, on the bigger picture, we can actually be putting in these lower lows and lower highs, and then however still reach a period whereas the market is exhausted, the sellers are now coming out of the market, and we can now start to make equal highs and equal lows before breaking out. So that's why our bias was bearish on Aussie for a long time. Let me just take you to the weekly chart. Weekly chart suggests this key area of 0.7550 is one, or even 0.7600 is one that is it's a key strong zone. Now, as I mentioned earlier on, the Fibonacci extension levels are very strong areas of support and resistance. However, in this case, it's a strong area of support. Fib retracement from a significant high to the low, and even here, I've took my fib from an area, so A to B is where we've rolled over and broke out, started to make the lower lows and lower highs in the overall grand scheme of things. So consolidation, trend, and now again it's consolidation. So overall we are actually hovering around this key level of support, 0.77, 600, because we're in a key area of consolidation since near enough the start of 2015. So you guys who are wondering what is going on with the Aussie dollar at the moment, there's no trades being taken from us. We are now awaiting a clear direction, okay, for an upside move and maybe a downside move. However, in an area of consolidation, you guys may have heard me say this before, we can often measure the consolidation range, okay. We can do this. Let's measure it from top to bottom. The height we can clone, we can duplicate either side, okay, duplicate either side. So there's one scenario, so we're always ready. It takes a few moments if you know exactly what to do. And to the upside, so downside targets are ready to go, upside targets are ready to go. 0.84, I would say 0.8500 on an upside break of Aussie, and a 0.7200 on a downside break. However, the moving averages that we have often give us an indication as which way this is about to break. We haven't got any crossover to the upside as yet. However, if I do, I would actually remain firm in a bullish outlook for Australian dollar, US dollar. I'm going to go over to GBP USD in a moment and Euro USD and break down those scenarios. However, right now, Aussie dollar sideways on a weekly / daily chart. Now, going to the perspective in the eyes of an intraday trader, there's a lot of opportunity here, the scalpers and so on. However, have your currency pairs, your favorite currency pairs, step back, do analysis on all of them, and then a tip is just to break down one or two with the highest probable rates of actually reaching your target levels. For us, me and Nat, we always ensure that it's going to be over 100 pips, maybe over 200 pips. We sometimes try our best, even though it's still difficult at times for all traders, all levels of experience, to actually waver around these areas of consolidation. So now, yeah, Aussie, I'm going to be watching it on the daily / weekly. When it does start to trend, I know it's going to bring me a substantial amount of pips anyway. So there's a simplistic breakdown of highlighting a range bound market on the Aussie. I'm going to move over to Euro USD. I've already got all my annotations and whatnot plotted on for this pair, okay. Now this one, let me just take you to the overall picture on the monthly. We have the bullish engulfing off 1.0500 support. MAs are down on the monthly. However, on the weekly, my MAs have just crossed to the upside, which has given me a certain indication, okay, of this market could be potentially getting ready to break out to the upside for some reason. I know we have major fundamentals tomorrow night. However, technically, this thing has given me the indication after 13-14 months that this could be now ready to pop to the upside. Now, as I described this here, a sideways / range bound market is basically a spring. Now, this spring, every time each range is retested, support, resistance, even the mid-range here as well, that's why it's so important to get your key levels accurate and correct, that this spring is now building up pressure. However, when the market breaks through these key areas, think of it as now the spring is being uncoiled. So when we do break out, we're going to probably jump onto a nice lucrative trend. Now with this trend, we'll mainly have to monitor the weekly, the daily, the 4 hour, etc. Euro USD, Aussie USD is not really in any period of momentum, bullish or bearish right now. However, what I'm trying to express is when it does break, Euro in this case, 1.15, 1.05, we are going to start to trend at least 500 pips. Okay, so breakout trading on the whole, and those guys waiting, the smart money, the dynamic guys who are now waiting for the breakouts, etc. The fastest money that can be made is actually from trend trading, because that's where the most liquidity is and the volatility, etc. And that's what we want to go for. It's all going to boil down to your trading style. Okay, but what I'm trying to express here on this is that we need to get our key levels accurate. So Euro USD, potential upside on the way. The only thing I would like to just express here, technical terms, is A, B, C, D Fibonacci. Upside potential, we've got the weekly and the daily MA crossover. I am technically aiming for myself 1.1700 on this pair, okay? So Aussie, awaiting break, potential to the upside, Euro upside, and the only other currency pair I'd really like to go over right now is GBP USD. Upside for you guys who watched the webinar last week, who've been following our Twitter and Instagram posts. GBP USD is in breakout mode to the upside at the moment. We're hovering nice above monthly resistance, now support. Higher high expected, 1.6 overall potential. So we've got another 300, 400 pips to go to the upside on GBP USD. If I'm not wrong, that's just my viewpoint. Okay. Alongside that pound strength, we also have GBP JPY. Now you guys know that we've been watching this for a while. Put out a trade yesterday on Instagram. At 191.50s. Now this is up way over 150 pips. Upside target for this, we're looking at 195s. Okay, so you've still got another 200 pips on that one. Bullish GBP USD, awaiting tomorrow's news from the Fed. However, technically bullish Euro, bullish Pound, bullish Aussie. I hope that was helpful. And guys, if you have any other queries, concerns, anything else you would like us to speak about on sideways markets and range bound markets, then just leave a comment overall. However, part 2 is actually going to be coming soon, where I'm going to go into detail and give you guys many tips on how to actively trade inside the range bound market. Hope that was helpful. Great bias on the major pairs. I'm sitting on my hands, I'm sitting back, I'm waiting for the breakouts. Those pound pairs look beautiful. I hope you guys make some pips. See you soon.